Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 25th, 2025, and Bitcoin has confirmed our small time frame price action analysis. We got a complete invalidation of Friday morning's treasury pump. Okay, that has been retraced absolutely. But more importantly, because that was just a 5% pump to the upside, here's what that means. More importantly than that, it has implications for our medium time frame analysis of Bitcoin that we've been talking about for almost 300 days. Most people are completely oblivious to that, and I'm going to show you how. This move that we got over this past weekend, it makes our medium time frame outlook for Bitcoin that much more probable. So please stay tuned for that. If all that sounds interesting to you, then watch until the very end. Hope everyone's doing well. We're also obviously going to have a look at altcoins as to what they're doing, Bitcoin dominance. So let's get into it. Bitcoin on the daily time, or no, let's stay on the 4-hourly time frame. Let's start on the 4-hourly time frame. So remember what we were saying, okay? This is right now a 40-day, let's just say 40 or so day channel. And we were saying, you know, the treasury pump wasn't that impressive. Many people are making much about anything green in the market, given that, in my estimation, according to my analysis, Bitcoin is still in a bear market. You know, which is why when people, you know, pose the question, is this it? Is this the top? Or, you know, this doesn't feel like a bull market, and people feel like, you know, even the smallest things are to be celebrated. That's characteristic bear market behavior. That aside, 5% up, and we said it's not impressive. Why? Because you're pumping into resistance. That resistance is the midline of this 40-day channel, right? Pumping into resistance. What do we say? If you're pumping into resistance, it might as well be red. That green candle might as well be red, and this is exactly what we saw over the weekend. Complete retracement of that move. We were saying in the previous episode, if you are bullish on Bitcoin, you not only want for this to continue, you want to show continuation with this. That was very important because this is pretty much your only hope. You want to show continuation with this treasury pump, and at the very least, you know, before the weekend is up, you want to hold on to the important phi ratio, the level here that if we were to lose, we would likely cascade down. And that's exactly what we did. We said that level was at the phi ratio. I said, you know, to be generous, it was around 13.5, 13K, let's say 113K, sorry. And if we lost that, we would get a big drop. And that's exactly what we got into the next likely zone of demand, which is this level of support here, okay? So that's exactly what we got. Not that surprising. If you look at social media, people are yelling, you know, this is a scam. This is a conspiracy. You know, who is this whale that dumped 24,000 Bitcoin by market order? You know, this is why you do technical analysis. It doesn't, I don't know exactly how it's going to happen or when it's going to happen, but we look at levels and probabilities and likely scenarios. And that was a likely scenario. However it played out, but it was a very likely scenario that if we lost this level, we would flush down into the next level of demand. Now, I was also saying in the previous episode that I'm looking at the next level down for Bitcoin to the $103,000 level. And that's still my level. But on the smaller time frames, here's why we're more likely to go up first than down. All right, let me explain. First and foremost, you do not break support at support. Okay, this is your support right now. This level of 110,000. Okay, and you are currently at that level of support. If you want to break it, you're going to have to move up and then break it from a higher level. That's number one. Number two, smaller time frames, you're more likely than not looking at this kind of price action right here. Okay, we were saying that this is the end of a corrective pattern. It's very true, but that corrective pattern was likely something like this, an ABC correction. That's the C wave. That's the C wave. That's the impulse of this flat correction, right? That's a treasury pump. But now that's your break. This is a counter, right? So that those two go together. So that's a flat correction. That's a counter correction to that flat correction. Now you have another move up here, and then another flat correction, and you look to be putting in something corrective like so. Or actually, you know, I think the third flat correction is down here, or the pivot is down here, and this is your first impulse up. Okay? In any case, you're putting in a type of accumulation channel down at a support level, which is why it's unlikely that you break down from this level, because this looks like an accumulation channel on the smaller time frames. Okay, accumulation channels are basically consolidations that change the price from down to up. Okay, having read that on the smaller time frames, I'm thinking, okay, there's very high chance, high probability that this on the smaller time frame, Bitcoin on the smaller time frame, is looking to go up first and then down to our level at 103K. The other reason I think this is likely, this down move happened on the weekend. All weekend price action. Okay, remember, anything on the weekend creates what we call a CME gap. You can look at these by going into the Bitcoin Chicago Mercantile Exchange charts. You can check this online. I mean, there's so many different indicators, free ones as well, that you can find CME gaps with. But you can see here, the gap in question is all the way over here. Okay, so we have a gap right now between 117 and 119K. Okay, so if 117 to 119K is a gap, then we're likely to come up to fill that level. Let's put it back. To fill that level. And this is very nice because on the smaller time frames, sorry, I keep erasing it. I don't mean to. On the smaller time frame, look at what your accumulation channel looks like. It looks like a quintessential base of a B, C corrective pattern. Going on to the higher time frames, you now can just, I mean, I want you to envision, I mean, if you have any chart hours, you can see what I'm talking about. All of this A wave, all of this B wave, all of this pivot into a counter corrective move. So this is the correction, this is the counter correction, this is the trend, this is the counter trend. All of this is one contiguous market pattern, market sequence. Okay, and so on the higher time frames, it makes even more sense. Let's get rid of the CME gap. Let's go on to the daily time frame. And now you can see what I'm talking about. Like, remember we were saying this more likely than not was the top of the top. taking you into impulse down into the larger move that we've been looking at, which we're going to look at in a second. But stay with me now. Let's count candles. Okay, this is 1, 2, 3, 4, 5, 6 candles down thus far. From this move from 124k, you can count, if you consider this right here, this 6th candle on the 19th of August as your orthodox low, which is basically the technical low of the move. It's not the lowest point, but the technical low of the move. You start your correction count from here. 1, 2, 3, 4, 5, 6. Or sorry, you know what I do? This is a little tricky. So I count 1, 2, 3, 4, 5, 6, and then I count 1, 2, 3, 4, 5, 6. Okay, so sometimes this is tricky. On the higher time frame, sometimes you divide that last candle between both, so you count them twice. Sometimes you count them differently. It's not perfect, but more or less you have 6 candles down, 6 candles of consolidation. You're likely going to put this move up to between 117 and 119k today, which would give you 6 down, 6 up, very likely candidate for a wave 1, wave 2 impulsive move. And I'm referring obviously to the principle in the Elliott wave analysis, where wave 1 typically takes around the same time as wave 2 in an impulsive sequence, and then you really get the move down in wave 3. People think, that little move over the weekend was like, everything, and that was it, and that was, people are literally complaining and trying to file lawsuits about that drop. They haven't seen anything yet. And if you track liquidations, we're going to have a look at liquidations in a second, but if you track liquidations, I think it was almost 10 billion worth of liquidations on that move, and that was just a small piece of wave 2. Imagine what happens when we start the real move down in wave 3. We're going to look at that in just a second, so hang tight. So let's put our let's put our Fibonacci retracement levels on here, and you can see that 117 to 119, where your CME gap is exactly confluent with your target for wave 2 in an Elliott wave 2. The target is a sharp correction up to the phi ratio, or between the 0.5 and the 618 of the drop down. So lots of confluence to say Bitcoin's coming in between 117 to 119 to fill that gap and to complete wave 2, a purported wave 2, very likely wave 2. We don't know for sure, but thus far it's looking likely that you're dealing with a wave 2 correction, which should take you up to those levels. Now, what happens when you get to those levels? Because people are getting now, oh yeah, Bitcoin's holding support, this is looking nice for continuation, that was bad, lots of liquidations, but we're ready to run it back. This is the danger of scalping and only scalping. Scalping's great when the market's choppy. Scalping's great, and by scalping I mean only trading short term, only analyzing short time frames. It's great when the market's only giving little bits and pieces. It's the best strategy in a bear market, which is why it's been the best strategy for Bitcoin heretofore, past few years maybe. But it erases your perspective. So many people are going to be blind to what comes next, because that's it. Once you hit this resistance, once again you retest this resistance level, you're flying down. I mean flying down, because what comes after 2, 3, wave 3 is the most impulsive, the quickest, the nastiest, the most violent of the Elliott wave impulses. That's what you're going into after this a bit of retracement to the upside. Now, let's look at one more aspect as to why we're likely heading up to between 117 and 119 in the immediate short term. So going to Coinglass and just having a look at the liquidation heat map, you can see very clearly that there is, right now we're in a desert right now of liquidations. There's not much going on. It's just, you know, choppy. You're pretty much putting in a mini range here, but you can see, look at this really strong, bright yellow pool of liquidity. It's right at 117, between 117 and 118. Prices attracted to pools of liquidity. It's like the most direct path, the path of least resistance. That's what I was looking for. The path of least resistance is to find the closest and highest levels of liquidity. That's to the upside right now in Bitcoin, right at 117 to 119. Very high probability move in the immediate short term. But let's clean this up 1 second. Right after that, look at this. So this is, you know, just short time frame, and a lot of people, you know, only do analysis on short time frames. Here's why that's dangerous. Sometimes you got to zoom out. Sometimes you got to be able to have a broader, more synoptic vision, because if you go on the higher time frames, look at all that liquidity down there. Look at where you're at. Look at where Bitcoin's at. Look at what it's done. It's grabbed liquidity here. It's grabbed liquidity from the tops, but look at if there's a pool of liquidity to the upside, there's an ocean of liquidity to the downside between our target of 60 to 90,000. Bitcoin is going to tear through that. Okay, there's so many indications that my medium time frame analysis of Bitcoin ripping down between 55 and 60K is supported by the technicals. There are so many orders down there, and it's going to get them. People don't like to hear it. People think it's crazy. People think it's, you know, outlandish. But this is why you look at the high time frame, and the high time frames typically play out on the balance of probability. Okay, now let's look at that medium time frame analysis. And why was I teasing in the beginning of the video that what's happened in the immediate short term price action has made our medium time frame outlook for Bitcoin, you know, going to between 55 and 60K, that much more likely. Look at this. So look, now you're dealing with this move right here, this 40-day channel being the top of top in context, right? The top of the top, right? You're in, we made the case that this was likely some sort of distribution channel. This was some distribution or some channel that changed the price from up to down. Almost 300 days of doing this. A lot of people are reading this as some kind of reaccumulation channel, but it doesn't make any sense that it would be that, for a lot of reasons. I mean, you're kind of misreading all kinds of Wyckoff analysis there, but that's besides the point. You're very likely putting in the top of the top here, or an upthrust after distribution, which is the technical term for this portion of the Bitcoin chart, or the Wyckoff distribution chart or schematic. If that's true, what we just did almost confirms that, as much as you can confirm anything in technical analysis. Why? Because this 40-day channel is now pretty much on its last legs. Okay, that move that Bitcoin did right here to this level in that treasury pump, what needed to break this resistance. Remember, channels are controlled at the heart line, at the midline. That midline of 117 to 119 needed to be overtaken to flip this channel bullish. You needed to come up, boom, and take over this channel to make this into a reaccumulation channel, to make this a non-bearish 40-day channel. Now, this pretty much closes the casket on this entire sequence of price action being bearish. The fact that you go up here and you get an unequivocal rejection. Obviously, we're not finished, but on the small time frames, just like we discussed, you're more likely than not putting in one of these, which that's not bullish because that's just the final piece, right? So these corrective sequences are fractal. Everything's fractal. So this is A, B, C. That's A. You can see A, B, C, and A. You can see A, B, C, and B. You can see the pivot and then the subsequent impulse, right? All of this, like I said earlier, is one contiguous A, B, C. That's going to be the impulse. That's the final resistance. And that is goodnight, Irene. That is very high probability analysis on the medium time frame because of what happened over the weekend. That's why I said it wasn't clickbait. It's a very important time for Bitcoin, very important weekend price action. I wasn't just saying it for clicks. Okay, so you're pretty much set right here for Bitcoin to fail at this resistance, which it has once, twice, and it's likely to on a third occasion, and then you get much lower lows, the first of which is 103K. So that's my Bitcoin analysis. Those are the reasons why it's very likely that in the immediate short term we go up to between 117, 119. In the medium term we go down to 103, and then we continue in a very violent cascade of liquidations down to our target of 55 to 60K, which we've been talking about for almost a year on this channel. Now, let's have a quick look at the total 3, which represents altcoins and Bitcoin dominance. So the total 3 also did what we said it was likely to do. Let's go on the 4-hourly time frame. Let's get rid of our stochastic RSI momentum indicator. You can see here the total 3, and let's get rid of this. Let's clean it up. I said the total 3 was likely putting in another distribution channel, just like Bitcoin, and that was a test of resistance. That was a test of resistance, and this move up here was not a break, but another test of resistance. You just have 3 tests of resistance, and what you see in the immediate short term is another failure at key resistance levels. So this also is very likely to come down to our key levels of demand down here, okay? And that's pretty much set. Now, on the smaller time frames, altcoins are looking for a retest, kind of like Bitcoin, of this bit of price action. So you definitely ranged here. You broke the range down. Now you're going to retest the range as resistance before continuing. So do expect a small move up, but a small one, a small move up in altcoins before continuation to the downside. But this move up in altcoins is probably going to be a little less than Bitcoin, right? Because Bitcoin's moving 117 to 119 from where it's at right now. That's like a 6-7% move. You could just see there that move back to the range lows, previous support, now new resistance. That's only 2 to 3% move, which means our Bitcoin dominance chart should be going up finally, which it is. Everybody and their mother are telling you that Bitcoin dominance is breaking down, and it has been breaking down, and blah, 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 blah. But I've been telling you, look, it looks fishy. I don't love the way it looks, but to me, it's still resistance. It's still support. This is still support. This is 760 plus days of support. We're at support. I expect support to behave as support behaves. And so right now, you're seeing on the daily time frame, a strong move up in Bitcoin dominance, a recovery. What does that mean? If Bitcoin dominance goes up, remember that means Bitcoin's dumping and altcoins are dumping even more, or Bitcoin's going up and altcoins are going up even less, or stagnating. Bitcoin is dominant in the market. Do expect Bitcoin dominance to move up and continue to move up until it retests the midline of the 760 plus day channel, which has been our trade thesis in Bitcoin dominance on Bitcoin dominance chart for a while now, right? Ever since we got this move down, because we know that midlines have to be retested before channels break down. So this confirms or corroborates our Bitcoin thesis in the immediate short term, in the medium time frame, as well as our altcoin thesis. Guys, that's my analysis for today. Hope this was helpful, useful. Like, share, and subscribe if you got value. Consider my crypto portfolio mentorship and consultation service, which you can sign up to at the pinned comment below if you'd like to train with me. More details on that service are at the link. Just click on it. You can see details about that. Also, if you're only interested in my single asset analysis service, you can also find details about that. Can you find details about that? I'm trying to think. Did I put that on? No, I didn't. No, the single asset analysis. It's not on Buy Me a Coffee. The single asset analysis is basically you send a payment through any one of the payment rails that I take that are listed in the pinned comment, and once I get that in my email within 24 hours, I send you the pre-recorded analysis on whatever pair you want me to look at. It doesn't necessarily even have to be crypto. As long as it's a viable chart, I can look at it. That's $120. That's just for me looking at one asset, and it could be short time frame, high time frame, whatever is relevant. I'll look at it. And then last but not least, BTC.D, our exchange partner, is giving 10% cash back for new deposits made into the market of at least 500 USDT. All you have to do is deposit at least 500 USDT or the equivalent onto the exchange as a new user, first time deposit, then make a trade, either spot or futures, wait at least 7 days, and you can get your 10% cash back. Max cash back is 10K for a 100K deposit. Guys, that's it for me. Take care. See you later. Bye.
I vocalize, too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi. I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest. Magnanimous, revive your vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening? Gone like the wind.